All right, understanding Obamacare penalties. What you need to know. Let's get started. First of all, it's all about health insurance and the health insurance reform, otherwise known as Obamacare, or the real name, the Affordable Care Act. Now, we're not here to get political, to tell you this is great, this is bad, this is, everybody's got their own opinion. We're just here to give you the facts so that you can make an informed decision on what you need to do about your situation regarding health insurance. In particular, the fee that you will pay or the penalty, because the law of the land is that you have to have it. And if you don't have a qualified health plan, you will pay a penalty. Now, of course, our friends at the IRS are not going to call it a penalty. They're calling it the individual shared responsibility payment. So that's what will be on the paperwork when you start filing new tax returns. That's why we're telling you this. So it's not going to be a penalty. It's called a individual shared responsibility payment. In any event, it's more tax that you will have to pay to the IRS than you're already doing so. If you're comfortable with that, well then so be it. But if you're like me, I hate to pay the IRS any more than I have to because I want to keep my money. I worked hard for it and I want to keep it in my pocket. So let's look and see what the penalty will be. Two things to know. First of all, it's the greater of 1% of modified gross income, and it's a little more detailed than that. We're going to get to that in just a second. Or a flat fee. So let's look at this 1% rule, because this is the one that's, we're going to demystify this right now, because it's not gross income, but rather a portion. Let's see how that works. So to calculate the 1% rule, first we have to understand that it's going to be 1% of your household income above your filing threshold. So it's not 1% of your gross income, but 1% of your income above your filing threshold. Now, before you say, well, what's a filing threshold? A filing threshold is a minimum amount you must make that requires you to file a tax return. To look at it a different way, the chart is like this. If you're single, under age 65, your filing threshold is $10,150. What does that mean? It means that by federal law, if you make more than $10,150, you need to file a federal tax return. If you're head of household under 65 and make more than $13,050, you need to file a federal tax return. And again, married filing jointly under 65, $20,300. Those are requirements, or the income requirements that are called filing thresholds that require us to file tax returns. Those are the benchmarks. So, how does this apply to the 1% rule? Well, first we have to understand that everything's based on income. In particular, our MAGI, or our modified adjusted gross income. So in this example, or before we get into the example, let's see what that is. Now, before your eyes glaze over, just take a quick look. It's just a bunch of extra stuff added to your adjusted gross income. The good news is that for the vast majority of us, it's just going to be very simple, our adjusted gross income, which can be found on Form 1040, line 37. And if you file different forms, like a 1040EZ, it will be line 4, or 1040A, it will be line 21. Now, getting back to our example, let's say we're single and we're making $30,150. Our threshold was $10,150, right? Because that's what our single under 65, our filing threshold is $10,150. So we get to subtract that from our modified gross income, which leaves us with $20,000 in this example. Now, $20,000 is what's going to be subject to that 1% rule, which in this case would be $200. So our penalty could be $200. And I say could be because, remember, it is going to be what the greater of is. The greater of what? Like we spoke of, 1% or a flat fee. So what's the flat fee? Let's take a look. The flat dollar amount for 2014 is going to be $95 per adult, $47.50 per child. Now, if you're single with one child, it's going to be $42.50. If you're going to have more than one child, then just add $47.50 per each child. So in this case, you can see here it's going to be $95 per adult. And getting back to our example, remember that the penalty will be the higher amount of the 1% or the flat fee. So going back to our example of a single person, we know the flat fee is $95. Most of us say, well, no big deal. I'll pay the $95 and keep on going. But the reality is that it's also subject to the 1%, which was $200. So you're not going to be paying $95. You're actually going to be paying $200 in this case. Because it was always the greater of. Now, that's 2014, right? In this case, let's take a look, because 2014 is pretty much said and done. But check out what happens in 2015, guys. We go from $95 per adult to $325 per adult. So it triples. And the percentage also increases from 1% to 2%. So it starts to get costly. If you do not have health insurance for 2015, this is what you will pay. And as you can see, for 2016, it gets even more expensive. So let's take a look at what may happen to a family of 4. Well, a family of 4, let's just say it's mom and dad, 2 adults at $95 a piece, times 2, that's $190, and we've got 2 kids at $47.50 times 2, that's $95. Well, the total here would be $285, or the flat fee would be $285. So our flat fee for a family of 4 in this example would be $285. Now, what about the 1% rule? Let's take a look. The 1% rule in this case would be to their modified adjusted gross income. Let's say mom and dad are both pulling down about $30,000 a year. Now, what do we have to do? We have to go back to that filing threshold, which in this case, married filing jointly would be under 65 would be $20,300. So we bring that into the equation and we subtract that from our modified adjusted gross income, which leaves us what is subject to the 1% rule, which is $40,000 in this case. 1% of $40,000 is $400. So here we go again. The penalty will be $400. Why? Because it's more than that flat fee of $285. So you can see it affects a family of 4 as well. And just like everything else, it's going to be subject to the increases in 2015 as well. So like we said, 2014 were what the examples were. So going forward, if you don't have health care, be prepared to pay what we just showed you according to your income. Now, of course, talk to a tax professional. Like we said before, we're insurance guys, we're not tax guys, so anything specific to you, you'd have to talk to a tax guy. But these are the guidelines. And like we showed you, moving forward on 2015, which is the year coming up, we showed you that it's going to be increasing threefold, $325 per adult, or 2% of your income. So it actually doubles. Now, what can you do? Well, the easiest thing is get yourself some health care. For the most part, you may be able to receive a subsidy that could pay for a portion, and in some cases, if you're not making that much money, could actually pay for your entire health care. Now, one thing to know that's very important, that's another misconception, is that everyone must enroll. Regardless of whether you're getting a subsidy, you qualify for a tax credit or subsidy, it doesn't matter. Everyone must have health care. Now, of course, for the grand majority of us, we're getting it through work, so we're covered there. But for a lot of our sole proprietors and entrepreneurs and part-timers or people who just haven't been able to find work or what have you, well, we need to have health insurance, and you've got to enroll. And that brings us to the next part. You can only enroll during special time periods. And that time period, boys and girls, ladies and gentlemen, and children of all ages, is November 15, 2014 through February 15, 2015. That's it. Once that's over, it's over. And to get things more complicated, there's deadlines within that enrollment period. For example, if you want coverage to start January 1st, that means you need to enroll by December 15th of 2014. Now, what happens if you don't enroll or you enroll after December 15th of 2014? Well, your coverage won't start until February 1st of 2015. And what happens if you enroll after January 15th of 2015? Well, your coverage won't start until March 1st. And like we said before, it's all over February 15, 2015. If you don't get it done by then, you're not going to get it done unless, of course, you have a special circumstance like you're getting married or you have a kid or you're changing jobs. There's quite a few, which we can help you with. Here's our shameless plug. If you've got any questions, guys, give us a call. 800-315-0867. We can help you out the best we can. Or you can check us out on the web, fasteasysignup.com, which allows you to actually enroll for free. You can bypass the beginnings of the healthcare.gov. We allow you to go ahead and enroll here. So again, shameless plug, if you'd like to, we offer our services. Our services are absolutely free for you, even if you call us on the phone. And if you use us or don't use us, hey, listen, get yourself some health care and try to avoid paying that tax penalty, if anything. And if you have questions, give us a call at 800-315-0867. I hope this has been informative and helpful to you, and we look forward to helping you out if need be. Thanks again, and take care.